Welcome, folks. So yeah, I've decided to do a weekly recap video regarding the weekly mentorship video that I posted on Monday. So as you all know, I've got a mentorship group, and they always get a weekly outlook video on how I expect the market to trade during the course of the week. So from now on, I'm gonna try to do at least probably maybe once or twice a week a weekly recap video where I go back to the analysis that I did, and then I'll illustrate how the market has played out, right? Whether we are right or wrong. I'll be doing those weekly recap video, and most probably they'll be on Thursday and or Friday. The reason why I would like to do them mainly on Thursday is because that's like the last day where we expect strong moves in the market before probably a reversal or Friday's tight range. So today I'm gonna do two things. Firstly, I'm gonna do a recap on dollar, a recap on euro, and also pound. Then I'm going to do a detailed analysis. This is an assignment that I gave you guys in the group. I'm going to do an assignment, a detailed analysis on GBPNZD. Let me just double check that so that I won't do a wrong pair. So I'm gonna do a detailed top-down analysis regarding pound against the New Zealand dollar, right from the monthly chart to H4, detailing all the institutional order flow concept, marking out all the premium and discount arrays. Right, so if you're in the group, I've got your responses. Some haven't sent their answers, but be that as it may, it's not an issue. It's only your progress which is going to be derailed, because the fact that I picked this pair, there's something in there that I want you guys to see. There's something that I want you to analyze and come to a conclusion, whether you're going to be a long trader or you're going to be a short trader on GBPNZD in the coming month or 2 months. So yeah, let's start with the weekly recap. Now, looking at dollar index, if you have watched the weekly video, you can literally see that I mentioned that dollar is going to find support just around 89.600 level, and that's basically what happened. And if you can see, the low of the week is coming in right just about 2 or 3 pips above the expected price point of 89,600. Then after that, the market took off with a reversal. Then market took off. This is a retracement, guys, not a reversal. This is a retracement. Then the market expanded again to the upside. We have seen much of that expansion today, right? Because of some of the positive news fundamentals that came out just a while ago on regarding the dollar index. Now, target was set at 90.50. That was the target that I initially said. That's your first point of scaling down your profits. So if you are in a trade standard lot size, then you can take maybe half or 3/4 off the table and you leave the rest to keep running. So the forecast regarding dollar index panned out perfectly right to the pip. As you can see, if you need the reference point and you haven't watched the weekly video, just check on the video links there. You're going to see the link to that weekly outlook video where I explain in detail. So we have seen that price has respected our monthly bullish order block. If we go to a monthly chart, you can see price is trading in a higher time frame discount zone. So we are likely to see huge moves going to the upside. As of now, we are not yet cleared for takeoff on dollar. We need to close above 90 point. Let me go to my daily chart. We need to close above 90.80 for a clear run back to probably around the 92.40 or 93.40 price points. Then coming to EURUSD. EURUSD, that's another one which played out perfectly. Now, if you go back to the video again, you're gonna see I expected price to reach the mean threshold of our monthly bullish order block. You can see here, this is the candle that I'm talking about. Price came, what is the high on this candle here? The high came in at 1.22536. That was the high. My entry point was set at 1.22426. That was the ideal shorting area on Euro USD. That was after price took out some stops and then it fell to the downside. Now remember, if you are bullish on dollar index, you are going to be bearish on Euro USD. So Euro USD Tuesday, Wednesday and Thursday has offered just under 100 pips or more. Dollar index has offered us from 89,600 just under 90 pips. Now coming to pound, right? Pound was the magic trade for the week because we opened this trade on Tuesday, if I'm not mistaken, Tuesday or Monday evening, I can't remember. But be that as it may, let me explain in detail. Right, I literally said 1.422401 is the number to look out for on British pound for shorting opportunities. And in the group, yeah, Tuesday morning 10 a.m. 9 a.m. London Open, I did say pound is now ripe for shorting, meaning you're going to sell pound. That was Tuesday 8 London Open. Tuesday London Open. Right, let me just zoom in. So we got Thursday, we got Wednesday, we got Tuesday. Can you see the price action here? Tuesday London Open, price was right here. Now this is where I told the guys to sell pound USD, and as of now you can see this trade has given us so far 143 pips. Now from my entry on pound, you can clearly see I'm in a sell position here with a 0.65 lot size. Let me get to a clear chart. 0.65 lot size, which I sold at 142,362. right? That was my entry on pound, right? So far we are dropping 135. It was at least 156 pips. So what I'm gonna do here, to the new members in the group, I'm going to show you how you can reduce the risk on your trade. I've already moved my stop loss below my entry point, just a few pips to below my entry point. Let's see how many pips do I have there. So that's like I've got 20 pips that I'm gonna move it again. So now first things first, you trail stop, because price has already moved 140 pips. You don't want to lose that, you see, because that's a lot to lose. At 0.65 you're looking at profits of well above $800 on that trade, right? Somewhere below or just above $800 in profit. Now you don't want to give back to the market, right? Meaning you must lock in your profits. How do you do that? Number one, you trail stop. That means moving your stop loss to the downside. As it is, price has only moved like 140 pips, which is enough for you to trail stop, right? To where probably just above today's high, right? Meaning I've locked in 31 pips. That's a profit of $206 that I've already guaranteed myself. Now, you've got 0.65 on your position. How then do you reduce, take off a bit on that position? I'm going to show you how to do that. Now, you come to new order, right? When you click on new order, you are presented with this pop-up screen, the one where you either sell or buy. But in this case, I've got 0.65 on my lot size. I need to take off 0.4 so that I leave 0.2, right? Now, you're not going to click sell or buy. You're going to close 0.4 of the position, right? 0.4 of the 0.65. Now you can see now I only have 0.25 left on my position. Now, after doing this, you go to a lower time frame. Now, you can be as tight as you want with your trailing. You can either put it here or today's high. As of now, I'm just going to leave it on today's high because there's still a bit of leverage that we could really see market turning to the downside. And if you watch the weekly video, I did mention that the current weekly candle, by the time I did the video, this candle was green. Then I emphasized that I won't be surprised to see this candle closing bearish, this weekly candle on pound. I won't be surprised for it to close bearish, and as of now I'm on track for it to close bearish. We only have a day left in this trading week, which is Friday, and for this candle to close bullish, it needs to reverse 80, just above 80 pips for it to close bullish, which is huge, right? It can happen. I think we've got NFP. Yeah, we've got NFP tomorrow. It can happen, and we've got a couple of pound news coming, but the likelihood of the market reversing are far less than the likelihood of market taking out the buy stops below here. As you can see right now on pound USD, let me show you something. Right now on pound USD, we've got this fair value gap to the downside, and we've got a liquidity void. You see, we've got this fair value gap in here. You see, we've got a range in price where market hasn't traded yet to, right? We've got this range in price. Price hasn't traded here in here ever since the market moved from this demand to the upside. Now remember, 1, 2, 3, 4 bullish candles. Always be careful, right? This is a lesson from last week. Always be careful of a series of consecutive bullish candle or consecutive bearish candle, because you are likely bound to see reversal. You can see this current week, it took out the buy stops here and the buy stops above there and the buy stops above here, took them out and then dropped to the downside. That was the setup we were looking for. Now, as for the emphasis that we could still see price moving lower because of this discount array down here, right? On a weekly chart, if I go to daily, right? If I go to daily, so this is now daily time frame, right? No, I don't want to close the trade. I don't want to close the trade. I just need to see this line here, right? This is our discount array on the daily time frame. What are the chances that Friday is going to trade into the fair value gap? They are huge. You see, and the chances of market trading inside the fair value gap tomorrow, they're quite huge. Now we have seen dollar taking off. You see, this is significant, right? The way dollar has taken off, as in rallied to the upside. These buy stops have been cleared. Remember these two equal highs, the ones I said they're too clean? Price has taken them out. Now if you look on this price action, we've got a fair value gap up here, right? We've got a fair value gap. Let me just mark it out. There, we've got this fair value gap. This one is on a daily, and then this one is on H4, right? You can see that the market is creeping in to the upside to take out liquidity in this void here. Now coming back to pound USD, the fact that I'm only moving my stop loss to today's high, I'm giving the market room to breathe. I don't want my stop to be too tight, otherwise market is just gonna reverse and close the position and then eventually fall off the cliff, because I'm expecting price to continue with the bearish momentum, because price is now respected here, this level here. Okay? That's the level that price is expecting. The only thing I'll be looking out for in this instance now is a weaker dollar. The moment the dollar gets weak, right, then this setup will be invalid, right? But as of now, I'm still strong bearish on pound dollar. Then finally we've got the yen, right? The Japanese yen. Japanese yen price that we were looking out for was 109.200. I can't remember. That was the price that we were looking out for long entries, or when price trades into this fair value gap, right? Price did trade into the fair value gap and then found support right here. The rest is history. We had a very nice trade on USDJPY here, right? This is USDJPY, guys, not pound. The yen found support inside the fair value gap and nicely took off to the upside for a reward of about 90 so pips. So you can already see we got like EURUSD, and this thing is still falling. EURUSD giving us, now it's like 100 pips. That means pound is also going to keep falling. I think there's someone from the Bank of England speaking right now. That's why the market is reacting like this. You got a couple of 100 pips from euro, 140 pips from pound, 88 pips from USDJPY. Those three assets only in excess of 300 pips, guys. There's nothing more you need per week, nothing more. 300 pips is a lot. See, it's a life-changing number of pips for your account specifically. So you can see the past 2 weeks, past I think 3 weeks, we have been precise in our market analysis. The weekly outlook video provided a platform where you could take trades in that week, and then you would have come out with something, you see. So be disciplined enough to wait for price to reach your zone, wait for price to reach your entry time frame. If you are someone who likes to trade other major currencies, if you come back to Aussie dollar, you can see how Aussie dollar fell from a premium range. You see, Aussie dollar, it fell massively. This is a daily candle. You can see how Monday, Tuesday, Wednesday traded inside into premium, drop, base. Now we've got another drop. You come to New Zealand dollar, same thing happened, right? The same thing happened. So this is Monday, Tuesday, Wednesday, and then it was already falling. Look at Tuesday. Tuesday's high. Where is Tuesday's high on New Zealand dollar, right? Where is Tuesday's high? You see, you must ask yourself. See, Tuesday's high is coming in at 0.72870. That's inside this bearish order block, right? Now, what do we say when market is bearish? Remember, this NZD USD, expecting dollar to move to the upside. That means NZD/USD must trade to the downside. In a bearish week, expect the high of the week to be formed Tuesday or Wednesday during London Open. That's exactly what happened. Let me mark this level, right? Let's just do this. Then I'll go to H1. Let me zoom out. Let me show you something, guys. Let me show you something. It's not rocket science, folks. Don't be fooled or anything. And you can see I'm doing this without any indicators whatsoever. It's just pure price action. So this is Thursday, Wednesday, Tuesday. What is Tuesday's high? Tuesday's high is coming in at just 5 o'clock. That's the transfer between Asian close and London Open, right? Look at this high, 10 a.m. Market came back, but it didn't trade above. That was your trigger. You see, the moment this happened, if you missed that, you're going to be placing your fibs to the low of Tuesday. Look where price came back in premium range on Tuesday, on Wednesday now, right? On Wednesday, price is in your 62% retracement level, and boom, how many pips? 133. Now, I'm not saying if you're selling EURUSD, automatically sell NZD/USD, AUD/USD, GBPUSD. No, make sure your analysis is aligned, right? You don't just open. The moment we say dollar is bullish, when you come to USD CAD, you're looking for long trades. From where? From an area of discount, right? You can see USD CAD has been ranging for a while. This could have been a bit tricky for you to trade if you didn't know what you are doing. Now, there's a pair that I want to do a top-down analysis for you guys. Unfortunately, the video might be a bit long, but yeah, you can watch this Saturday or Sunday when you're not busy, or as you go, watch and pause. So yeah, it might be an extra 15 or 20 minutes from now. So that was the weekly recap. So now there's a pair that I gave you guys in the group, the mentorship group, pound NZD, right? Pound NZD, right? So I asked you guys to do a top-down analysis on this pair, right? Where to start? Now, when we're doing our analysis, remember, we have to look at the 9 to 18 month period, right? Once we have highlighted that area, that's the area that we are going to do a top-down analysis in relation to current price action. So 9 to 18th month, so this is a monthly chart, so that's 15. So this is the 18th candle from where we are right now. So it's this price action that we are going to look out for. Now, I'm going to first define my institutional price points. That means my supply and demand, premium and discount arrays. Firstly, I'm going to highlight my supply and my discount zones, and for that I'm going to switch to a line chart. Why a line chart? Because it shows me the real price action. It shows me the real institutional selling or buying points. Where the market turned, it's a reference point, right? Where the market turned, that's a reference point for me. Now, just need to reduce this a bit, right? Until August is much better. So the reference point is coming in at 2.08110. That's the first reference point. You can clearly see that's where the market turned in that 18th month period. Now we also have the 18th candle here, right? The first candle, and then we've got 18 months, right? I just want my lines to be clean and straight together here, so that if I have reference points that I have to put, I've got leverage to plot those numbers. Then we also have this point here, right? Now watch what I'm doing, guys. Watch clearly, because you are going to learn something very important there. Watch what I'm doing. What I'm doing here, I'm marking out turning points in the market, major turning points. These are going to help me in identifying my institutional order flow, right? Now the fact that I always click and right click and go to the menu there is for me to define the range that I want to use, and for now I'm only using a range up until August. You can see here on my right, they are all straight together. Now we also have this level here, right? This is our 18-month range, right? 9 to 18-month range. We've got 1, 2, 3, 4, 5, 6, right? Turning points in the market. That was the change in market structure. But now we can't ignore this guy, right? We can't ignore these laws here, because they are significant to what price action is doing, because they basically provided support here. Yes, there might be a distance, but they are providing support. Now I'm going to mark the immediate nearest low, which is coming in right here. I'm going to refine the pricing once I go to the candlestick chart, where I'm gonna see the open, the high, the exact price points. Now you can see what I've done there. I've marked my turning points, right? Now they're going to help me in defining my supply zones, my institutional order flow, my premium and discount arrays. Now once you've done this, right, you switch to your candlestick. Now watch the magic happen. This is the magic now. See, this was a turning point. It's our last up close candle. This was a turning point. It's our last down close candle. This was a turning point. Our last down close candle. This was a turning point. Our last down close candle. This was a turning point. Our last up close candle before market moved to the downside. Our last up close candle before market moved to the downside. Last up close candle before market moves to the upside. Last down close candle before a move to the upside. You see, this is just basic clear price action. Already once I've done this, I can already see where the market is, right? Right now current price is trading inside this last up candle. And what do we refer that candle to as? A bearish order block. Now this is on a monthly chart, right? This is on a monthly chart. Already we can see price is now in discount, right? You're expecting price to find resistance in this range here. Now if you look at the open of this candle and the close of this candle, right? Now let's get those numbers quickly. So this one, the close is coming in at 196,779. This one, the open is coming in at 196,829. A few pips from each other, but it's the same when you're talking of a monthly chart. You need to give leeway for the price to move, right? Yes, sometimes they can be exact to the pip, right? But when you look at these candles here, you see these candles like 1, 2, 3. Look at the closing price of this bearish candle, the open price, and the opening price of this following candle. Now coming back to current price action, already we have identified this is our bearish order block, right? We also have another bearish order block here. Now this one is interesting because it coincides with the last down candle before the rally. This area is going to be sensitive. There's going to be it's like a pivot. There's going to be a sensitive in the market around the current price action. Now we also have this candle, which is our bullish order block, right? Now, why didn't I mark this as the bullish order block? Because this already provided support when price came down. So now I'm gonna mark. You see what I'm doing, guys? This is what you must do on your charts. So we have a bearish order block. We have a bearish order block here. So that's the first one. And then we also have where price is currently at, and then we have a bullish order block down here. Now this is on a monthly. We have a bullish order block. Now it might take time what I'm doing, because I'm trying to explain in detail as much as I can so that you guys can understand. You see, normally I don't do this for public, but this video is going to be instantly available online for people to watch. Now you can see price is currently inside a bearish order block, meaning price is in discount. Now we've got this high to this low. If I place my fibs there, you can clearly see we're just approaching the equilibrium point, meaning we are not really yet there, right, in terms of premium, right, where we are going to be looking for selling opportunities. That's premium range. But we can also not ignore this bearish order block. Now some are going to ask me, but Ivan, we've got the week, right? On this bullish order block we've got the week. On this bearish order block we've got the week. We also have the week. Now that's your rejection block, right? But you need to be careful now with price. Once price is trading inside a rejection block, yes, ideal conditions will be to trade the other side of the market, but you must be careful because a breakout can happen. Now once I've done this, what else do I see on this monthly chart that I can put as reference point for my buyers? Right now price is inside a bearish order block, meaning I'll be looking to be a what? A seller of GBPNZD, right? Where should I be hunting for selling opportunities, right? When price is at least around the 50% mean threshold. So the blue line represents the 50% mean threshold of my monthly bearish order block. Once you have done that, you now need to go to a lower time frame. If you don't see any interesting aspects on the chart that you would say, no, I have to look at this. Now we've got these two highs here, relatively equal highs up here. We've got these relatively equal highs. Now what is above there? We've got buy stops. Now I'm just gonna mark this with the pricing, right? So above 1.98270 we've got buy stops. So now I'm gonna go on to the weekly chart, right? Now I'm on the weekly chart. You see this price action here, the current week. It opened with a gap to the downside, filled that gap and kept rallying to the upside. Now we've got buy stops above 1.98270, right? Those buy stops, they are going to be taken out sometime in the coming week, And once that happens, now you are in a premium range where you should be hunting for short trades, right? Short trades to where your first, so I would say 1.98270 is your ideal shorting area back to this monthly bullish order block. So you've got a minimum of 946 pips. Now this is a weekly time frame, guys, take note. So the range is going to be big. Now you can see here, let me zoom in a bit, grab my pen too. You see here we've got a vacuum. You see here we've got a vacuum. Look at the reaction. Look at the reaction when price trades inside the vacuum. It always finds resistance and trades to the downside. That's crucial, right? That's a vacuum. Now we have this, you see the gray shaded area, that's our monthly bearish order block. This is where we are anticipating price to find resistance and trade lower. But now today's Thursday, take note. So the only time we are going to look at this chart is the Monday's session, where we are likely bound to take out the buy stops above 1.98270. We are likely bound to take out those buy stops before price turns lower, right? Meaning in the upcoming week, guys, make sure if you are looking at pound NZD as a pair that you look to trade, it's ideal to trade to the downside. Now I'm going to go to daily time frame. There's another aspect of this analysis which I'm going to share with you guys just right at the end of this presentation. Right, so this is now daily. We are now on the daily chart for pound USD. Remember, we have the buy stops here. Let me highlight those. We've got buy stops here, right? And that is where market is creeping to. Market wants to take out those stops before we can see some signs of resistance. As it is right now, there's momentum going into the 50% mean threshold, right? If you are a risk trader, right? If you are a risk trader, which at this moment in time, I wouldn't advise you to do that. If you are a risk trader, the moment price touches the 50% mean threshold, you can short, right? But you are going to have a stop of close to 130 pips. Yes, if you are trading minis and micros, then yeah, you can risk that, but that's still a bit steep in terms of the stop range. Now going to the H4, so you can see this is now H4. So above this price point, let me just try to fit everything here. So above here we've got buy stops. You see those equal highs, relatively equal highs here. So I'm expecting, now you see the 50% mean threshold, where I was saying if price clears these two highs, you can short, but make sure your stop is way above here, which is about 100 or so pips, right? So that's what I'm anticipating this pair to trade. I'm expecting it to trade to the downside in the coming week, but only after we have closed and we have taken out the buy stops above 1.98270. Now I mentioned that there's something else, an intermarket analysis that will help in the setup for shorting GBPNZD. Now what is that? Now that's looking at the interest rate market. Now when we come to investing.com, right? I'm gonna go to investing.com quickly, right? When we come to investing.com and we come to central banks, right? The guys in the mentorship, you know how to look at these numbers. You come to the central banks, right? Now remember, interest rates, they are one of the most essential market movers. The way central banks play around with the interest rates is one of the most mover of the markets. Now, when we look at the central banks, remember, we've got, and dollar is now confirming, right? We are having a very strong dollar. Let me go to dollar index quickly. Sorry about my mouse, guys. Right, we can see how dollar has taken off. Dollar has lifted off from the 90-20, right? Strong bullish dollar. There is no reason, there is no supporting evidence that can stop pound NZD to fall from the current levels. There's no supporting evidence to stop it, right? That means it's likely bound to find resistance and trade to the downside. Now, coming back to the interest rate markets, right? When we look at Bank of England, right? Bank of England, the rates are sitting at 0.1, right? Then we come to RBNZ. The rates are sitting at 0.25. Now, institutional sponsorship, looking at the interest rate markets, right? What do you need? When dollar is bullish, remember, you look for a low rate country that you pay with a higher rate country. In this case, low rate country being England, Bank of England. We've got the pound. Higher rate interest country, New Zealand, which has got 0.25%, right? We've got our pair. Now, when we go to the chart, we are looking for price to trade into premium to be shorting the asset. So, when dollar is bullish, you look for a low rate interest rate country to pair with a higher rate interest country. You are looking for shorts. You are selling the low rate interest country to the higher rate interest country. So this is what I wanted to share with you guys, and the guys in the mentorship group. I've seen your responses. I'll respond one by one and tell you where you need to improve. So this is what I was expecting you to do in your analysis, and on the explanation I was specifically looking for that institutional sponsorship where you look at the interest rate markets. So yeah, that's pretty much what I wanted to share with you guys. So this is gonna be on YouTube instantly. It's gonna premiere just now, so hopefully you guys can have a look and take something off from this free material. So yeah, if you're in the mentorship group, guys, I'm sending something on the group shortly so that you guys can have something to do over the weekend, and classes on Saturday 9 a.m. to 1 p.m. right? If you're not in the mentorship group and you'd like to join, just send me a message and then we can talk from there, or you can visit my website and everything. There's more information regarding that process. So yeah, this is what I just wanted to share with you guys. So I wish you guys good luck and happy trading. Thank you.